Good evening, all. Maybe I should say good weekend, because it is the weekend edition of your financial market wrap-up. And this is for Friday, and we are on the 23rd of June, 2023. The time doesn't matter. Not going to be trading tonight. A good down day in the market. I say good because you had lost the embedded readings, and I was looking for the markets to come down, and I'm gotten out of two out of the four indices so far. You came back a little bit in the gold market, even though the dollar was stronger. I think in part because there wasn't too much pressure on the bonds and notes, which flip-flopped and lost yield today. We're still under selling pressure in the energy markets, as the market there is dealing with what? The market is dealing with the idea that central banker upon central banker is fighting inflation. And as they do so, they tighten their economy down. As that happens, you see industrial production, manufacturing slip-slide away. That's less oil demand. Yes, you're not going to lose it all because people are going to drive in the summer, and that's what we've got in the northern hemisphere. And we sit there, and this is when we consume the gasoline and so on. But I've been warning clients, hey, I don't think you want to come in for the July 4th driving. That's already been done. I just think you now wait, and it's proven to be not a bad idea. In the grain markets, you smashed them to the downside today. They came back 20 cents off the low in the beans because you never know what the weekend's going to hold. The market is looking at this and saying, the dryness isn't as bad as we thought in some areas. You got to get through this period. If you get too dry, you hurt the crops. Beans are a weed. This is only June. The emergence isn't tremendous yet. Corn is the market that I'm more concerned about, and it didn't seem to care. It was down 32 cents today. If you take a look, by the way, look at what feeder cattle, for those of you that trade grains, have done. As corn soared to the upside, you dropped it. The moment corn peaked out and started down, you shot up in the feeder cattle market. I was going to call Gordy Linn and tell him to talk about that. I don't know why, but that's what went on. And that's the Linn Associates. He does phone commentaries all the time. As you can see in the S&P, I know as you look at it on the month, and we're only here coming into the end, it's the 23rd, you're still up nearly 5% for the month. It doesn't feel like that when you look at the daily chart, but you're doing okay. For the week, you lost 1.5%. But remember, the month, you're still up, what I just said. The market's backing off a little bit. You are in an uptrend. You have higher lows, higher highs. This is a swing line. And if you've taken my charting course, you learn on the swing line how to draw the current line like it'll be to the next day. So you can go to that day's high or low. There's 5 rules. I teach them to you. You can do it by hand. But then I give you the indicator in my charting software, and it does it for you. We then get to the S&P 500 index. You have higher lows, higher highs coming right on up here. So the question is, how do you work with it and work with it accordingly? As I look at it in this, you're still very bullish. The question is to make another thrust happen. Will you get the 18-day average over the 100? That's the next step that you need. And if that happens, think of what you'd have. You'd have the shortest term average over the medium term, the 100, both over the 200. From a moving average point of view, that's where the bullishness is. If I'm going to attack the market this week and try to drive it down for whatever reason, this is the zone that I'd be looking at to try to attack it. The Bollinger Band bothers me. Markets only stay over the black band or under it, this one, 5% of the time. I don't tell clients ever to buy a Bollinger Band. Hitting it is a sign of strength temporarily, but it's also a spot where smart money comes out of the market. I like the fact that you're embedded. So as far as I'm concerned, the market on a good break this week, as long as the red line on a weekly basis is over the 80 level, I expect prices to be bought. The traders that I would teach, if you get a close under 79, out of the market you go. If you can buy the market there, you're still looking for the upper Bollinger Band before this is done. When we look at the Dow, it is not the same type of chart. It's an overbought, not an embedded chart. It's also not a trend. You have a higher high over here to there, a lower low. So what happened here? You know, a rising tide lifts all ships. So when the NASDAQ and the mania mini bubble, whatever you want to call it, on AI took off. Things that shouldn't have gone up, in my opinion, did, be it the Russell, be it this index. They both kicked themselves, went up, and now the question is, what do you do with them? Here, too, the question is, are you going to get a bullish crossover? So far, the moving averages don't act like it. They're just drifting sideways at this point. The powerhouse of the market's the NASDAQ. I mean, this is where the AI stocks are. And you can see the strength. It just keeps hitting the upper Bollinger Band. And it looks to me like you're right on the verge that's going to happen this week that we're coming into, where the 18-day average is going to get over the green. I say that as long as the market gets a drop in it, you're going to see the buyers step in. Again, I don't want to see the red line under 79. That would be bail. Without that, I think the buyers are going to show up in the market. So this is a week where get your list out would be things that I'd be looking at. And in the Russell, just overbought, got picked up here. First move over the 200-day average, it didn't hold. Be careful. Again, you want to buy the ones that have the strength, not the ones you think, well, if that's good, this is going to be good. In the 30-year bonds, you're still very much in a downtrend on the longer-term charts. Lower highs, but higher lows. So pause. If you can get up and over 129.16, to me it would be a sign, especially if you close over 128.30, that you're going to attempt the upside, possibly the upper band. Until that occurs, which it hasn't, if you take out this week's low, which was 126.24, I would get very concerned at that point that what this market wants to do right from that point on is add another leg down and make a run here. The bigger picture is that you're totally sideways. From a weekly point of view, is this worth trading? No. Then we get to the 10-year notes. Not quite a sideways, but in the same type of pattern. Not really. You just have a higher high, lower low, and you're oversold. I don't know what to do with a chart like that. Then we get to the dollar index. So the dollar index is trying to come back to the resistance point of the 18-week average. I don't think this is in an up or a down trend. I think it's in no man's land temporarily. Although, by the end of the week, this could happen. If the market goes up and settles over the 18-week average, which would also be over this week's high, 102.78.5, and that's 102.86, let's call it. Well, then I could argue I'd have higher lows, higher highs, and be the first bullish sign that we've had in a while. But you got to get there. This is today, Friday. That would be on a weekly chart next Friday that I'd look at that. I'd be looking during the week to see if it's doing it, but that's when I'd be paying attention. In the euro, you get bearish this if you close under these two numbers. Now, it's going to try, I think, to give you a bullish setup where the 18-day average gets over the 100. It's got all the right to do that. The pattern is a higher high, lower low. It's really not a chart setup yet to do anything. And one of the strong currencies has been the Canadian dollar, but I find it difficult to buy 3 weeks of hitting the upper Bollinger Band when I'm overbought, or the chart is overbought. I'm not. And I don't see anything I'd want to do there. How long is it going to take before the Central Bank of Japan wants to test the short sellers? Because the central bank head has said, if you test us, we'll intervene. Well, you have an embedded reading. I am not ever saying to sell under a lower Bollinger Band, but if you get a good rally in this market and it stays embedded, come on, bank, intervene, drive the market up, because I'd be telling my clients to go short into the bank intervention. Bitcoin. Let's say hooray for Hollywood. Now let's replace the name Hollywood. Hooray for Citadel. Hooray for BlackRock. You came and you've driven that market up because you are real credential people. And once the market saw that those two stepped in to this, changed the whole game. So it's the way I look at it. Now we get to the energy. And as you look at it on a weekly basis, which is the bigger picture, you've only had a bear market rally to that 18-week average of closes. That's all that you've done. You haven't proven to me the prices are over it. You need to get over it to tell me that you're going to get an even bigger increase of Brent over WTI. That's not about the direction of the oil market completely. The direction of the market is confused. On a weekly chart, you still have the pattern of higher lows, higher highs, but because you're staying under the 18-week average, the bias is down. You're in the middle of no man's land. Same identical thing in WTI. Moment you look at this chart, why be involved? Rebob gas. I told my clients not to be a buyer for the July 4th driving holiday. Do you disagree? I mean, just take a look at that. Frankly, you get bearish if you start taking out the 247.56 level. I could end up with lower highs, lower lows, and that could set up a challenge at the 233 level. What is wrong here with all the parts of the gas and the energy parts, the oil? It's simple. There's still overproduction going on out of OPEC. We haven't seen the 1 million barrel a day cuts yet come in. They're due in July. And central bankers tightening and tightening and tightening. And that is a tax on people, all of us, because everything we do that uses credit in any manner we're paying for. And that's pulling money away from my left pocket for what my right pocket can spend. If you like what I say here, you're probably going to enjoy what I do in the morning. So let me tell you how the morning starts. 40 charts on futures I start recording with and analyzing for you, along with the fundamentals, what reports are coming out during the day, what's going on abroad, be it Asia, Europe, and the impact, and then we get into the charts. In the charts, I cover the whole spectrum of the futures markets for you. I'm going to cover the stock indices, the currencies, the interest rates. I'll carry you right through into the soft commodities, the grain markets, everything that's there. I replicate at 9 o'clock, and the reason 9 and the ETFs, I go into that with all the important spiders and individual stocks as well, because most of the major reports that we talked about at 5:15 are out. We can take a look, and the monies get deployed. Now, what do I mean by that? Smart monies get deployed in the first half hour of trading. The stock market doesn't trade around the clock. Yes, I know that there's a secondary market, but the market comes in, everybody balances their books right off the bat. That's why you shoot up and down, and it's all over the board as it gets going. By 9, I want to be able to analyze and get to you shortly thereafter all the analysis on that, and that gives you the go. We talk long-term and we talk short-term. You'll see on the weekends, like just now, I recorded my version for the spiders, the stocks, the ETFs using weekly charts for my subscribers. You'll see some of that here on YouTube as well. And don't forget, you can always click on YouTube, this blue button. You sign up right there and you're right on our list and you get everything as they're coming out. I'm Ira Epstein. Go to our website under What Research, or just pay attention here, watch my fingers, go to the top, you'll see an icon, give it a click, take you right to that area. I'm Ira. You have a great weekend. I'll see you Monday.